Hello, everyone, and welcome to the next episode of Smart Outsourcing Talks. And today, we are going to talk about legacy, leadership, and generational firms. Okay, and a lot to do with the wealth management. And we have a very, very interesting personality, Rory Henry. So, before we go ahead, let me just introduce Rory. And I'm feeling a bit formal because most of the times, me and Rory knew each other for like 3 years, and whenever we meet, we talk about everything under the earth, about all the creativity things and all. And I always feel that he lives in this Hollywood city, so I always say, okay, share me some Hollywood stories and stuff like that. So Rory, today we are meeting on a different ground, okay?
Yes.
So
Okay. We're going to do serious ground.
yeah. So it's going to be hard for me to
I know.
keep the track going with our creativity.
You're right.
But so folks, Rory Henry is a certified finance planner and behavior financial advisor and a director at Arrowroot Family Offices. Rory has spent more than 15 years at the intersection of tax, financial planning, family wealth, where he has been helping firms move beyond compliance into a deeper aspect of relationship driven advisory. He's the co founder of AFO Wealth Management Forward, where he works closely with accounting firms looking to integrate holistic planning into their practices. Rory is also the creator of Advise ROR methodology, a framework that blends behavioral finance with practical advisory strategy to help firms strengthen client relationships and build sustainable advisory revenue models. This is something interesting. Though his work, speaking, and conversations with leading voices across the profession, Rory has been a strong advocate for helping accountants navigate not just financial complexity, but human complexity and relationships as well, and especially relationship with the money, right? Today, we are going to explore what it really takes for firms to evolve from transactional services into a trust based advisory relationships, especially when family dynamics, behavioral biases, and long-term wealth conversations are involved. It's always tough. Rory,
Yeah.
welcome to the Smart Outsourcing Talks.
Manoj, thank you so much for having me. I feel privileged to be on air with you. Hopefully, I can share a little bit of wisdom with your audience.
Yeah, and before we start, maybe you could give a little background or maybe a little more deep stick about what exactly you do, how do you work,
Yeah.
and how your model works.
Yeah, that's a great question, Manoj. I came from the tax world. I had a tax firm. I built a technology almost a decade ago that was a tax practice management tool, just like Canopy and Carbon. And I saw the ability to just be more efficient, and the fact that in the accounting profession they really didn't have a modern day CRM to better
Hmm.
serve clients. And so I asked the question, how can we better serve our clients
Hmm.
using technology? Unfortunately, at the time, I wasn't able to raise money. Canopy and
Hmm.
Carbon took the
Hmm.
marketplace there.
Hmm.
But during that time, I was working with a family office, and I saw the advancements in wealth tech, Manoj, and the ability to serve not only the business needs, but also the personal financial planning needs. Historically, what we did at a family office, which was mainly for the ultra high net worth, can now be accessed by even the mass affluent and everyday clients.
Hmm.
So I saw the advances in estate planning technology
Hmm.
and financial planning technology, and I posed the question, Manoj, why don't CPAs and accounting professionals and financial advisors work together? It's
Hmm.
one relationship, right?
Yeah.
People need business advice, they need great tax advice, but also a personal financial plan. I'm a firm believer that everybody should go through a holistic financial plan, whether
Hmm.
you're wealth preserving or you're
Hmm.
wealth seeking, especially if you're wealth seeking. You need to
Hmm.
have a plan to be
Hmm.
able to grow your finances. And
Hmm.
then before I go on too much longer here, Manoj, I
Hmm.
really dove into this world of behavioral finance and the
Hmm.
psychology of money. I
Hmm.
went through the financial therapy curriculum. I became a behavioral financial advisor. And I
Hmm.
know that sounds fancy and academic, but it's not. It's
Hmm.
really understanding the human behind the numbers,
Hmm.
understanding their fears, their
Hmm.
goals, their
Hmm.
dreams, their aspirations,
Hmm.
so we can start providing personalized, timely, impactful advice that is truly meaningful to people, because the numbers are the numbers, but
mm,
numbers don't move people. You move
right.
people when you start speaking to them into what
Mm,
matters most and what's meaningful. And that's what I really advocate for, is really understanding how we can better move people from a
mm,
current state to then a desired future state,
mm,
using personalized and timely advice.
mm. And so, in your model, do you work with a lot of accountants and CPA firms with their clients, or do you have direct clients more, or
Yes.
how it works there?
Yeah, so we have our clients here at the family office, and then we partner with CPAs and accounting professionals who want to provide what I call a virtual family office, Manoj.
Oh, okay.
So really taking their CPA accounting practice, their cash practice, and then
Mm,
layering on the personal financial planning, the wealth management, the estate planning. We even
mm,
do M&A advisory.
mm,
I call that truly a holistic offering,
mm,
being able to provide for the business needs, but also the personal financial planning needs of our
mm,
clients. And
mm,
I believe the best of both worlds, the best of the accounting world,
mm,
alongside the best of the personal financial planning, wealth management world, really
mm.
is the model of the future. And we
And do
do this
you,
through technology.
mm, sure. And do you look at any minimum size in terms of wealth, or how do you take your clients?
Yeah. Well, people think with a family office, you need to be working with clients with millions of dollars.
Yeah.
Yeah, right. And unfortunately, I'm trying to dispel that
Mm,
belief, because I think with technology now, we
mm,
can work with clients that are opening up a retirement account for the first time,
mm,
and be able to help them on their financial journey, whether they're doing a tax advantage account and saving for retirement,
mm,
or starting to save money and invest in the market. We can have an outsized impact. So technically, we say we don't have a minimum. We work with clients of any net worth,
mm,
that are looking to have a financial plan,
mm,
to increase their opportunities moving forward. But
mm,
historically, I think family offices have known to work with high net worth clients.
mm,
But I've been advocating for, and all the thought leadership, the writing, and the podcasts and the webinars I
mm,
do, we show that you can have a financial plan for someone who is well seeking, that's just
mm,
starting their financial journey.
mm. And when it comes to the family offices, and many of the times people don't know when to form that. Okay, so what's your take on that?
Yes. Well, I've been saying that, in essence, many accounting professionals, Manoj,
Mm,
they are already a de facto family office. They
mm,
have a Rolodex of advisors that they
yeah.
work with.
Mm,
Unfortunately, they have been monetizing those relationships. So I
mm,
trademarked, as you stated at the beginning,
mm,
Advise Roar. And the Roar
mm,
isn't short for Rory, it's for a
mm,
return on relationship. Because I think
mm,
if you look at that relationship, if you're
mm,
doing taxes, or you're doing cash work, if you look
mm,
at the opportunity to provide personal
mm,
financial planning,
mm,
wealth management, if you layer in estate planning and start connecting generations, if you start
mm,
doing M&A advisory as well, that
mm,
relationship goes above and beyond just the tax and the cash
mm,
work, and you
mm,
start layering in assets under management, and other services that increases the enterprise
mm,
value of that client as well as your firm.
mm,
So really, for folks out there, they just need a system, they need a license, and then a way to monetize that in
mm,
a way that makes sense. I always say, Manoj, you have to crawl before you walk, before you
mm,
run. And so
mm,
for many firms out there,
mm,
partnering with an RIA, a wealth management
mm,
firm, is a great way to start the process,
mm.
for your
Yeah,
clients.
yeah. I like that. Return on relationships. That's what's meant by Rory. Return on
Yes.
relationships.
Yeah. ROR is yeah, advise Roar. Yeah, right. Or that's return on Rory, right? No, it's return on relationship.
Yeah.
Yeah, it's basically taking the virtual family office model,
Mm,
using behavioral finance, or the human first approach that I advocate for,
mm,
to make sure that we're providing great business advice, personal financial
mm,
planning advice, but
mm,
also personalized advice that understands that human behind the numbers.
mm. So, Rory, tell me, what makes leadership inside the family office, I mean, in family, fundamentally different from non-family firms? So when we look at, I mean, I'm sure you would have looked at both, right? The professional firms and the family ones. So how the dynamics are different.
Well, I think when you're dealing at a family office uh, with generational type of clientele, a lot of this stuff is doing the work that we probably already do and layering out the numbers. But then you have the emotional side of family dynamics,
mm,
of relationships, right?
uh,
And
mm,
so a lot of times the Gen 1 is looking to pass down money to Gen 2 or Gen 3 in a
mm,
way that doesn't spoil their future. And
mm,
so a lot of this is education in the work that
mm,
we do,
mm,
doing a family constitution, a
mm,
family mission statement, and start
mm,
helping families align their values with the decisions.
mm,
Manoj, a lot of the research shows our
mm,
values shape our
mm,
goals shape our behaviors. In turn, our
mm,
behaviors will then reflect our values. The
mm,
work we do in these families is really helping them become crystal clear on what
mm,
they value most. And then
mm,
when we do that, it makes the decision making process a whole lot easier. There
mm,
isn't decision fatigue because
mm,
Manoj and his family, they're
mm,
aligning their values of community or
mm,
their value of health or
mm,
their value of relationships with
mm,
those family and business decisions. I
mm,
believe, though, that we can take values-based planning and
mm,
layer that onto the great
mm,
work that's being done in the tax and accounting space, in the business
mm,
advisory. We can do
mm,
values-based planning with organizations.
mm,
I actually had a great podcast
mm,
with Joe Pine, who is the author of The Experience Economy. I just
mm,
released it.
mm,
He released his latest book, The Transformation Economy, and he
mm,
talks about how the economic value, the
mm,
progression of economic value has gone from extracting commodities out of the earth. Then we had the
mm,
Industrial Revolution of making goods.
mm,
We then transferred into delivering services in the service-based economy. He
mm,
then had that famous book, The Experience Economy, where we start staging experiences. But he's
mm,
saying the real economic value now is the
mm,
fact that we're in the transformation economy and helping
mm.
people transform who they are. And we can start
Oh,
charging for those outcomes, not
mm,
necessarily inputs of what we do, but the
mm,
outcomes that we provide. And I
mm,
believe that we as financial professionals sit in a very
mm,
privileged position
mm,
to work with clients because they let us into the very intimate details of their
mm,
business, their personal financial lives. And
mm,
so we get invited into the very nature of business decisions as
mm,
well as their personal lives,
mm,
birth of a child, divorce,
mm,
death,
mm, mm,
inheritance, buying a home, selling a
mm,
home, job
mm,
promotion,
mm,
job loss. And so I
mm,
think it's on us as financial professionals to be
mm,
able to provide advice that is uniquely tailored to that
mm,
specific client. And the only way we can do that is by really understanding who they are, where they
mm.
came from, and where they want to go.
Yeah. And Rory, in your experience, when you are incubating a family offices and um, I mean, imagine, somebody who's not, uh, I mean, finances is there in closed doors in Excels and stuff like that. And now you have to kind of put a family office. So you'll have to put a charter and it's going to be a very hard conversations, right? I mean, family find it very, very hard to conversing money, between the people. So,
Yeah.
how one should manage that.
Yeah, that's a great question, Manoj, and this is what I've been
Mm,
advocating for,
mm,
and why I believe the work that we do is so important, is to start having these conversations around
mm,
money and meaning,
mm,
because
mm.
money is a taboo subject, and I
Yeah.
think that we get comfortable in the numbers, but
Mm,
as we're seeing with OpenClaw, ClaudeBot,
mm,
MultBot,
mm.
all the
Yeah.
AI that's going on, it's going to do a
Mm,
lot of the numbers
mm,
work that we
mm,
do.
mm,
What is our true value add? It's
mm,
really helping people make decisions that are
mm,
complex, right?
mm,
Complex
mm,
financial decisions, complex business decisions, and in
mm,
essence, complex life decisions. And they're still
mm,
going to want to deal with the human that
mm,
understands, is able
mm,
to look at the very different levers that they can pull
mm,
within a business, within their personal finances, to better
mm,
advise the client.
mm,
So not everybody, me and you, Manoj, we may have the similar balance sheets,
mm,
although I think your balance
mm,
sheet's probably bigger than mine.
mm,
We may have similar balance sheets, right?
mm,
But we
mm,
make totally different life decisions
mm.
because we're unique humans
Yeah.
with a past that's unique. And so we
Mm,
need to start understanding and
mm,
doing a deeper discovery into what
mm,
matters most. And for maybe the
mm,
audience members that are listening right now that are
mm,
advising businesses and business owners,
mm,
we need to have a better understanding of where they came from,
mm,
and then mapping out where they're
mm,
currently at, problems that they're
mm,
having, and
mm,
pushing through those barriers. And most importantly, Manoj, I
mm,
talk about this a lot, is
mm,
helping people map out an
mm.
ideal future. My friend
Right.
Hal Hirschfield, who
Mm,
is the foremost authority on this concept
mm,
called your future self,
mm.
says that we really make decisions for our future self that are no different than making decisions for a stranger. He did brain
Oh.
scans, and the same part of
Mm,
the brain lit up when we saw a
mm,
picture of our future selves and when we saw a picture of a
mm,
stranger. We don't
mm,
make decisions with that future self in mind. You think
mm,
about it. You go to the
mm,
supermarket, you're
mm,
hungry. You're not
mm,
thinking about Manoj a week from now that's not going to need
mm,
all those groceries and that food. We just
mm,
have a hard time. It's because
mm,
that from an evolutionary perspective, we're too
mm,
worried about that animal behind that bush rather than a
mm,
30-year retirement or
mm,
5-year projection business decision.
mm,
And so it's
mm,
really helping people map out a plan for what an ideal future self is.
mm,
And I do envisioning exercises where we help
mm,
people really map out what that ideal
mm,
future looks like. Where
mm,
are you?
mm,
Who are you with?
mm,
What are you doing?
mm,
And most importantly, how do you feel? I know
mm,
we're in the numbers business, but I think in the end, we're really in the
mm,
feeling business and helping
mm,
people identify with that ideal feeling and that
mm,
future state. That'll help them
mm.
make the necessary behavior changes in the here and now.
Mm. And when you look at all these aspects, right, it is very holistic. Finance is just a part of it, right? But
Yeah.
there are a lot of other parts to it, So, how do you kind of guide them to maybe arrive at many a times, people wouldn't even thought of, okay, how I'm going to spend like next 30 years,
Yeah.
right? It's going to be a difficult question, right? But then,
Right.
I mean, the financial objectives, of course, will come from if you have figured out that.
Yeah. I
So,
think the point that I would probably like to make is actually
mm,
just interviewed Carl Richards. He's one of the foremost authorities in behavioral finance. And he
mm,
said, Rory, it's not about being exactly correct on what that 30-year future
mm,
looks like or a
mm,
5-year projection for a business.
mm,
It's not
mm,
necessarily about getting that number right. It's just
mm,
being a little less wrong and
mm,
giving people a North Star. This is at least a
mm,
direction that we're going to go in. We
mm.
may hit it, we may not hit it,
Yeah.
but at least we're moving in the right direction and we're a little less wrong from
Mm,
being able to make a catastrophic mistake that
mm, mm,
could become a
mm,
torpedo to our business or our personal
mm,
finances. It's about being a little bit less wrong. I always say, at least in the financial advisory side, and it's the same on the tax and accounting side,
mm,
we're really preventing people from making 3 to 5 catastrophic
mm,
decisions that could torpedo
mm,
their
mm,
business or their personal finances, right?
mm,
And so that's what people hire us for, is that guidance, helping
mm,
them be a little less wrong, making
mm,
sure that we can keep them afloat.
mm,
And then I believe we're really coaches, Manoj.
mm,
We're in the coaching business.
mm,
There's not a lot of research that backs up a do-it-yourself mentality. My friend Dr. Megan Lertz,
mm,
who I'm
mm,
actually working on a TV show with, she
mm.
says, Rory, self-help is kind of bullcrap. She says that really we need coaches, we need accountability partners,
Yeah.
we
Mm,
need a community to help us
mm,
make the necessary behavior changes to make our
mm,
life's goals, dreams, and aspirations come true.
sure. And when you're working with the multi-generationals, and there's a lot of emotional overtures and stuff like that, and many of the times they all know that, okay, we need a professional governance, but then they want to be also on the top of it. So, how do you handle that?
Well, it's getting them in the same room together,
Mm,
Manoj. And once we can actually have that family mission statement and do the
mm,
values based planning, it,
mm,
it really makes those decisions easier. And
mm,
people want to make sure they have a voice. I always
mm,
say that, our job is making sure people feel heard and understood.
mm,
And
mm,
so I am a big advocate of the
mm,
consultative approach. I think
mm,
in the professions, we have hung our hat on our
mm,
knowledge. So
mm,
being the expert in the
mm,
room, I
mm,
reference in my book and a
mm,
lot of the speaking engagements I do, we all have an
mm,
inner advice monster. It
mm,
was made famous by author Michael Bungay Sanger. And he
mm,
says it's that urge to want to give advice, like,
mm.
whether it's solicited or unsolicited, right? Yeah, one of them is like, I want to share my knowledge. I have these
Mm,
credentials. I know what I'm talking about. I want to
mm,
share it, right?
mm,
The other one
mm,
is I want to save somebody. You've seen a problem
mm,
before. You want to
mm,
save them.
mm,
But I
mm,
think the more rewarding practice, Manoj,
mm,
is dropping that guard, dropping
mm,
your guard, dropping that ego from needing to have the answer to start
mm.
asking the right questions
Right.
and helping
Mm,
clients many times
mm,
come to the answer on their own.
mm,
And that's where self-efficacy happens. That's
mm,
where they start,
mm,
they're able to co-create a plan with you because they're
mm,
many times coming up on the answer
mm,
themselves. And that's why I'm
mm,
a big believer in the
mm,
consultative approach and asking those deeper, more meaningful questions
Hmm.
on what a client wants out of their life.
Hmm. Hmm. And when you have again a multi generation, then one of the key things which I've seen is that um, everybody wants to have a voice, but then elders would want respect. So how do you handle that equation?
Yeah. Well, that's where you get everyone in the room, and then you have some family governance, right?
Hmm.
How we're going to make uh, decisions. We always like to say we create a plan that we have an institutional decision making process that everybody
Hmm.
agrees to. And
Hmm.
so if you get buy-in and everybody agrees to this is the process that we're going
Hmm.
to go through when we make decisions as a family, then
Hmm.
people get on board. And so it's
Hmm.
really that discovery work, that deep dive that you do with the family when you first start working with them. But I like
Hmm.
to say this, Manoj, this doesn't need to happen with the ultra high net worth. This can
Hmm.
happen with the everyday family
Yeah.
as well.
Hmm. Hmm.
And I think this is what I'm advocating for.
Hmm.
Well, I know I'm advocating for this is
Hmm.
being able to have all your finances mapped out,
Hmm.
engaging the children early on as process as possible.
Process. Yeah. Hmm.
Start having them have a bank
Hmm.
account or working
Hmm.
papers at 14,
Hmm.
and
Hmm.
start getting them involved in saving for retirement. I mean,
Yeah. Hmm.
politics aside, those Trump
Hmm.
accounts are starting
Hmm.
people, from birth, being able to fund those
Hmm.
accounts, and they get
Hmm.
to be invested in the
Hmm.
money making
Yeah. Hmm.
system that is the stock market. And so
Hmm.
if we get more people involved in finances at an early age, they're more likely to make better decisions,
Yeah.
moving forward for their best
Hmm.
interests now and the best
Hmm.
interests for themselves in the future.
Hmm. Hmm. And one of the thing is always that when do you see that a firm is ready for succession? So is there any point at which you say, okay, now the firm is ready, or to still do some pre-preparation?
For the accounting and or financial advisory firm?
No, I mean saying to put a succession planning in place, and kind of put a family offices in place.
Oh, yeah, for the families, you're saying.
Yeah.
Yeah. Well,
Yeah.
it just depends on what the wants are. Does Gen
uh,
2 want to take over the family business? Look, many times, most of the time, they don't want to be involved in the family business. They want to do their own thing. And
yeah.
so the Gen 1 may want to pass on the family business because that's what they
Hmm.
did, and they
Hmm.
want their kids
Hmm.
to carry on the
Hmm.
legacy. But many times, what we experience is that's not the wants of
Hmm.
Gen 2. They
Hmm.
want to do their own thing. So once again, I think
Hmm.
that's the discovery process that we
Hmm.
go through is helping align decisions with really what matters most to each of those
Hmm.
individuals,
Hmm.
and not necessarily living for your parents, but living for yourself.
Yeah.
And so it's
Yeah.
really dependent on the person and really what they
Hmm.
want out of their lives.
Yeah. And I've seen that in a lot of family businesses, when Gen 1 is there and Gen 2 comes in, they start working, and then again they don't have a clarity about the pool of funds they have, and whether the compensation is there. So they don't know which is their money, which is family money,
Yeah.
what is their power, what is their. So most of the times what happens, they get frustrated and say, let me work on my own. At least
Yeah.
whatever I may make, I know that's
Right.
my money and I can decide on that, right?
Yeah.
So
And Manoj, and you probably experienced it too, is that identity is that Gen 1, their identity is that business.
yeah.
And many times it's very hard for them to let that go
Yeah. Yeah.
because that's who they are.
Yeah. Hmm.
And so that's a lot of the work that just in general in retirement planning, a
Hmm.
lot of people know that what they're retiring from, but they never really map out what they're
Hmm.
retiring into. And to
Hmm.
have structure and
Hmm.
purpose in
Hmm.
retirement,
Hmm.
to set up hobbies or interests that
Hmm.
is going to carry them throughout their day. And so a lot of the work that we do with families can actually be had by retirees because
Hmm.
it's really you're in the identity business. And it's
Hmm.
helping them shed that past identity of
Hmm.
that business or
Hmm. Hmm.
that work, and
Hmm.
help them become a new person and have
Hmm.
hobbies, interest,
Hmm.
and passion and purpose in
Hmm.
that future life. And I see the same with Gen 1 and
Hmm.
these family businesses.
Hmm. So Rory, we spoke about the family businesses, and I'm sure you are helping a lot of uh, these personalities or sports people who just makes obnoxious money and they don't know what to do, how to plan and stuff like that. So share me a little more stories on that side of it.
Yeah, so I've been fortunate enough because I live in Los Angeles. I am doing a TV show called Playbook Finance, where we're
Hmm.
exploring name, image, likeness, NIL, and student athletes. And
Hmm.
it has been an eye-opening experience, Manoj.
Hmm. Hmm.
I didn't really understand the work involved in a TV show, but
Hmm.
when you go with 2 hours of sleep for a whole week and doing 16-hour days, you really understand, what it takes to make a Hollywood show. But I've been
And
fortunate enough
now
to.
I think now you will require a planner, right? You
What's
make so
that?
much money. I think you make so much money now. You will require a planner.
Yeah, right. Yeah, right. Yeah, every planner needs their own planner, right? Yeah, we all have blind spots, Manoj.
Yeah.
Yeah, we
Sorry to
all,
cut
yeah,
you that.
yeah,
Yeah.
yeah, we all have blind spots, right?
Hmm.
Every financial advisor, every CPA needs their own CPA and financial advisor, right? Um, Yeah, but yeah, I've been fortunate enough to
Hmm.
really explore this subject of behavioral finance and the psychology of
Hmm.
money. And we're
Hmm.
using student athletes and major colleges, UCLA, Georgia, other
Hmm.
schools, where we're looking into family dynamics,
Hmm.
into helping these student athletes and their families
Hmm.
understand the relationship to money and meaning.
Hmm.
Those generational influences,
Hmm.
financial flashpoints, what
Hmm.
happened in their upbringing, and how
Hmm.
that dictates many of the decisions they
Hmm.
make here and now.
Hmm.
So
Hmm.
it's an exploration, a deep dive using storytelling to really
Hmm.
uncover not our relationship to money only, but
Hmm.
really what is meaningful to us. What
Hmm.
does a meaningful life look like to each
Hmm.
individual? And so it's
Hmm.
been an incredibly rewarding
Hmm.
experience, Manoj. I'm
Hmm.
excited about the show.
Hmm.
We're hoping to reach a global audience around really understanding business and our psychology of money,
Hmm.
using sports and sports
Hmm.
metaphors to
Hmm.
really dive into financial concepts, which we hope
Hmm.
will be
Hmm.
interesting to the audience out there.
Hmm. And how do you get a buy-in? Because I see that this would be very young guys, pretty successful pretty early, and they've a lot of money. And then, how do you get a buy-in of these kind of people because they have not exposed to anything, and so suddenly they have so much money.
Yeah, this is called sudden wealth syndrome.
Huh.
Lottery winners all of a sudden are
Yeah.
given
Yeah.
a bunch of money and they
Yeah.
blow it all many times, right?
Yeah.
So it's
Yeah.
called sudden wealth syndrome. And
Hmm.
for these student athletes who are now being able
Hmm.
to get paid for the first time over the last number of years, they're
Hmm.
giving money at an early age. At the age of
Hmm.
18, they're
Hmm.
giving a whole bunch of money, and they
Hmm.
haven't been taught. We
Hmm.
don't talk about it at schools really.
Hmm.
They don't get taught,
Hmm.
at the dinner table. And
Hmm.
so the ability to go in there and give
Hmm.
them just the tools of understanding inflows and outflows, the
Hmm.
debits and credits,
Hmm.
right?
Hmm.
Like
Hmm.
that is a huge benefit to them. And then
Hmm.
when we do the deep dive with the financial psychologists to really help them understand their upbringing
Hmm.
and why they make certain decisions around money,
Hmm.
that has been very illuminating as well. But I
Hmm.
think the first thing that we do is really map out the finances and look at
Hmm.
the inflows and outflows. And a
Hmm.
lot of people, as you know, Manoj, they don't
Hmm.
do that. They put their head in the
Hmm.
sand. It's called
Yeah.
financial avoidance. And so,
Hmm.
really, we're saying, hey, don't
Hmm.
avoid those finances. Let's take a look at it and look
Hmm.
at those line items, those
Hmm.
expenses.
Hmm.
And then what we do is we help them really understand their values. And when
Hmm.
we can help them align their values with each of those line items
Hmm.
and those expenses and those
Hmm.
the sources of income, well, they
Hmm.
can have a better understanding of what they
Hmm.
want out of their lives.
Hmm.
So yeah, it's been an interesting experience, but we believe we can have an outsized impact by
Hmm.
using colleges and these athlete stories
Hmm.
to be able to introduce this
Hmm.
concept of psychology of money to
Hmm.
an audience that can
Hmm.
start asking themselves those questions of what's meaningful to them.
Mm. And how do you advise on the investments they have to make? So, I mean, there are different avenues, and how do you share that? And
Well, this
how
isn't
do
investment advice, Manoj. Compliance wants me to say that. Look, I'm a big believer in it's not really timing them. I've long said it's not timing the market; it's timing the
Hmm.
market. So when people
Hmm.
think of a
Hmm.
financial advisor, they think of stock pickers, right? When
Hmm.
they think of the accounting professional, they think of people crunching numbers. As
Yeah.
we know, we're so much more than that, Manoj. We're strategic
Uh,
planners.
yeah.
We do holistic planning, really life
Hmm.
planning, we do business
Hmm.
planning.
Hmm.
So it's really, in essence, helping them save one,
Hmm.
and then invest that money.
mm,
How they invest it depends on the risk profile. We need to
mm,
go through as most financial planners, but
mm,
really the goal is helping them just understand
mm,
the power of compounding. Right?
mm,
It's
mm,
not timing the market, not timing the
mm,
stock market. It's time in the market. And
mm,
when people see the power of compounding and what they can have
mm,
as far as a potential nest
mm,
egg in, in 15, 20, 30 years, they're
mm,
shocked. And I think that becomes the catalyst
mm,
to having behavior change and
mm,
saying, oh wow, instead of potentially spending money on this new car or this new outfit, I'm going to
mm,
start maybe putting money into the market or some type of
mm,
asset here
mm,
that can produce in the long run.
and so one is that, and second, when you're looking at uh, when you're looking at advising them, so what's the model that you follow? So you meet them like every month or once in a quarter, or you review that? So
Yeah. So
how it works? Yeah.
yeah, that's a good question. I'll say this. That's why I love the accounting professional, because
Hmm.
they many times are meeting with clients the most, especially they're working
Yeah.
with business owners.
Hmm.
Um, you know, I I long argued that it is the accounting professional who's the financial first responder. I heard that from our friend Jody Padar,
Hmm.
and I
Hmm.
said, "Oh my gosh, you're right.
Hmm.
They are working earliest on with
Hmm.
clients in their financial
Hmm.
journey. They can have the
Hmm.
outsized impact." Our
Hmm.
friend Ron Baker likes to say, "Working with
Hmm.
clients from womb to tomb."
Hmm.
So when a child's born, you open up that college plan, right? You help
uh,
people start a business or do that retirement account for the first time. You help people grow a
hmm.
business. You
Hmm.
help people sell a business. You help them
Hmm.
with their job promotions.
Hmm.
And
Hmm.
so it is the accounting professional that is invited into these many life moments.
Yeah.
I said at the beginning, it's really we get intimate
Yeah.
invitations into the lives of our clients. And
Hmm.
this is where we can have the outsized impact, especially for those accounting professionals. AI
Hmm.
is getting better and better. It's
Hmm.
doing much of the manual work. It
Hmm.
is you, the financial professional, that is sitting with that client that can help them through business and their life transitions that can
Hmm.
really have the outsized impact on their
Hmm.
lives,
Hmm.
dealing with divorce, with marriage,
Hmm.
with death.
Hmm.
And we'll have insight into their finances, but we can
Hmm.
also have the personal insight, the human
Hmm.
insight into who they are and where they came from, and more importantly, where they want to go. That
Hmm.
will be the best value that we can provide as a financial
Hmm.
professional. So I don't know if
Hmm.
I answered your question there,
Hmm.
Manoj, but
No, so how it works, your relationship with the client works. So
yeah. Oh,
is
we
there
we can meet
any? Yeah.
quarterly.
Uh,
Yeah, we can meet quarterly. Sometimes
hmm.
you meet with clients more than that. But
Okay.
good.
So it depends on what is the kind of engagement
Relationship.
you have, or
Correct.
yeah. Hmm.
Correct. Depending on the in the engagement, the relationship. I
Hmm.
long argued, Manoj, that it's the financial advisor, the one that
Hmm.
is managing the assets that
Hmm.
is receiving a lion's share of
Hmm.
of the revenue.
Hmm.
And with technology getting better and better,
Hmm.
it's allowing us to have probably higher margin services. You think
Hmm.
about it, Manoj. It is the accounting professionals that had the accounting professionals had to become the salesperson that has
Hmm.
had to change their pricing to meet all the value they've provided.
Hmm.
And it is the financial advisor they've had the 1% AUM and the financial planning
Hmm.
fees that has
Hmm.
had to increase their services
Hmm.
to meet the 1% for all the fees that they're charging. You
Hmm.
would think the financial advisor would have to sell more, right? And
Hmm.
the accounting professionals just would do more work, but
Hmm.
it's been opposite. The accounting
Hmm.
professionals had to change their pricing and try to repackage their services.
Hmm.
And that's probably uncomfortable for a lot of accounting professionals.
Hmm.
Whereas a financial advisor is like, wow, I'm getting all this money. I better start doing estate planning, start
Hmm.
doing insurance planning, start doing
Hmm.
financial planning. So I think
Hmm.
it's been quite fascinating to look at the two professions
Hmm.
and the difference in business models and on how you price and provide value.
Hmm. Great. And you talked about that finance playbook. Can you just elaborate a little more?
Yes, Playbook Finance is the TV show. We're at the intersection of sports, psychology, and entertainment. And we're working with student athletes and their families around their relationship to money and meaning, and
Hmm.
doing a deep dive into their sport,
Hmm.
as well as the family dynamics that got them to where they are, the highest levels of college athletics.
Hmm.
Obviously, discipline, accountability, something that we can take in the sports world and translate to our finances. And they just don't have the tools or the mindset or the education in the finance space. But if we can take out what they're good at in their sport and saying, hey, if you be disciplined with your finances and you have accountability and you let that grow over time, just like a muscle and working out, you'll have, a nest egg in the future that will give you financial freedom. So it's really giving them the actual tools and the right methodology as far as their finances, but also the psychology of understanding why they make certain decisions that will set them up for success moving forward. So we're working with student athletes. We're getting 10 colleges across the country for a first season where we start working with the student athlete. I have psychologists, some of the leading minds in the world of behavioral finance and the psychology of money that are coming in and working with the student athletes and their families in the schools to help them understand, finances as well as why they make certain decisions. And we hope this will be engaging for audience members out there to start asking themselves questions about their upbringing and why they make certain decisions. Because I think as we move forward, the AI tools and all this stuff will do the numbers, but I think we can start asking ourselves the deeper, more meaningful questions of where we came from and where we want to go.
Fantastic, man. And so we are coming to the end of the session. So Rory, the last question I want to ask is that, what do you want to say to the accounting professionals who are managing their clients? So how do you kind of introduce financial planning with their clients? How they should go about it and really help their clients?
Yes, that's a great question, Manoj. I always say that I'm a behavioral financial advisor, and this is working with financial professionals as well as end clients. I'm in the belief behavior business. I'm helping people believe they can do something and then create the necessary behavior changes to make that come true. I would tell those in the audience, Manoj, to just hang on. AI is going to do a lot of the work that you're doing, of what financial advisors do. If you continue to provide great service and understand your relationships and have that human touch, you're going to be able to provide so many more services to that client, from financial planning to estate planning to wealth management to potentially M&A advisory. But it is you that is the financial professional that has that close relationship with that client, that they trust in very complex decisions, that they lean on for financial advice. And you, many times, for those in the audience, are working very closely in comparison to other financial professionals. You're going to be able to have the tools here shortly to be able to have human insight into where a client came from, how they want to, outline their finances, and then help them with the many financial and life decisions utilizing technology. But they're going to want that human that has that close connection to ensure they're making the right decision in some of these complex business and personal finance choices they're making.
Great. So thank you so much, Rory. It was really an interesting conversation, and I think I've picked up few. And the top one on my mind is return on relationships, right? I'll remember forever.
Thank you,
And
buddy.
and I
Well, this
also
is the
love.
return on my relationship with Manoj. I get to speak to his audience. So this is ROM, the return on Manoj.
So return on Manoj or return on money.
Yeah, right. Exactly. There you go. That's the name of our next podcast.
I also loved what you talked about. I mean, your relationship with the money and the behavioral finance. So it is very intrigued as a subject, but I'm sure folks like you really help to clarify finance, which is very difficult subject. So finance is okay, but wherever it involves planning means future means you don't know what's happening, and you have to chart out that's the most difficult part of it. So I think that's a great job you are doing, and thank you so much for your valuable time and tips to this accounting community.
You're welcome, buddy.
Thank you so
Thank you so
much.
much thank you so much for being my friend here and inviting me on the podcast. I really appreciate it. I hope to see you next conference and we can yuck it up there.
Yes, sure. All right. Bye-bye. Take care.
Bye-bye.